Welcome to Markets Now. I'm Michelle Rook along with Vince Boddicker with Farmers Trading Company, seeing some mixed trade in both grain and livestock futures here today. And Vince, let's start off talking about the grain trade. First of all, corn and wheat have been mostly lower, soybeans to the plus side. And soybeans, I know meal's kind of holding that market together. And did we just bounce off some support here? Or do you think that maybe some of the export news has been driving a little bit of an uptick today?
Well, the export sure doesn't hurt us at all, and we knew we were going to be looking at a big export number this week. I think it's probably a little bigger than the trade was thinking. I thought it might be around 2, and you're almost 2.75 million metric tons. But I don't know if there's a lot of support. The weather still looks good. We still have some threatening things that could come in there, but right now it doesn't look like it. As you and I discussed, I think 13.15 3/4 and 13.21 are important numbers that we don't want to close below in that November.
Yeah, and part of the reason that we took out all of the support levels in the first place was because we were taking out weather premium. How much more do you think we realistically need to take out here?
That's a good question. Could you easily take this thing maybe down to 12.60 or less? I think you can. I think the other thing that we all have to be cognizant of is looked at an article yesterday, and I believe so far this season, Brazil has exported 71 million metric tons of beans, or at least sold 71 million. Usually they've sold somewhere around 59 by this time. And their target is 93 million metric tons to export. And if we look at Chinese demand, I think their total imports are somewhere around 96 or 97 for this year. So yeah. The point being there is, does China really need the U.S.? Not with that kind of a crop there, if they would sell everything to China.
Yeah, no, that's a good point that you make there, and obviously something to watch here going forward. So the corn market falling back here for the 8th straight day. Has that been a function of not just removing weather premium, but the fact that the wheat market has just been going down and taking it as a prisoner?
I think that's part of it, along with the fact of people are tired of the old news of Ukraine and the ports and the Russian war and putting it behind them. Everybody's still eating and getting okay. And then you take with that just a mere lack of demand on that corn side. We had a few weeks ago, we had some good demand for a week, and that's been it.
Yeah, exports were pretty poor this morning, only a little over 4 million bushels on the old crop category. New crop, not a whole lot better. And then we still have some yield estimates coming out, and those still look like the market is pretty comfortable with the size of our yield. With as poor demand, we're not going to have to worry about tight ending stocks, right?
That's what I'm taking as I look at it. And I think we all have to remember that the algorithm traders, which are the majority of the trade, are looking at those things. That's what they're trading. And until we can pick something up from a demand standpoint on exports, I just don't see a lot of movement. I think 497 and that December contract is a big number that we want to watch. I don't think we want to close below that.
No, and we did manage to close above $5 yesterday, so hopefully we can do the same today. So we mentioned wheat being a drag on the corn market, and wheat, is that technical selling once again? You mentioned the war premium kind of being taken out here as well, though.
I think it's technical, and you got to wonder too, is it not partially psychological? Could it be margin call selling? I think there's a lot of people that have been friendly wheat, believing it has to go up because we don't have the crop here and we've got the problems in Ukraine, etc. But I think when you look at those things and you believe a market should go someplace and it doesn't after a day or two, I think it's time to exit the market if you've been long and go with the trend and see where it goes to. When you look at that Kansas City at September, it's mid 760s. Could you take that down to 730-ish or so, that old low we had in May before they're done? I think it's a possibility.
Yeah, and we don't have any export news to really drive that market higher. I mean, weekly exports were just a little better this week, but I think Egypt bought Russian wheat, and so we're still not real competitive, are we?
We're not. We're still overpriced compared to where they're at. Visiting with some people, they say, well, if you were going to buy wheat, wouldn't you buy it from someplace you know you could get it there versus going to Ukraine or Russia and wonder if it's going to get to you? Well, it's a good theory, but it still comes down to the point of I'm going to buy it as cheap as I can and go from there.
Yeah, and the higher dollar does not help with that. That's for sure that we've seen improve here recently. So the cattle market, we had a down day yesterday, kind of caught up in the macroeconomic sell-off, but the market trying to recover here today, and that market continues to be very resilient, doesn't it, Vince?
It does. We look at the four breaks that we've had this year, every one of them just about the same amount. So you look at that, you look at the fact that it appears box beef may seasonally hold that $300 level and not go a lot lower. Both of those, I think, supportive. Any breaks in here around 184-ish, where we got to this morning and yesterday, probably not bad places on these cattle. If you need some reownership to look at that, I don't know where it goes. Could we see 190 to 192? I think is legitimate. Maybe it's higher than that, but I like to take one step at a time. And as you and I discussed earlier, I think we need to remember everybody looks at the prices of feeder cattle and fed cattle and say, well, how can the consumer afford this? Let's keep in mind, even with inflation, beef prices at the retail store aren't a lot different than they were in April and May of 2020.
Yeah. And we've kind of got a stalemate going on cash here again this week between packers and feedlots, don't we?
Yes, I'm guessing the Packer does not want to give up any more profits than he has to. He's going to hold out, but I think demand is good enough that he's probably going to have to pay up. And you take the other side of it, feedlots are current enough that they don't have to jump and get scared of I got to move the product.
Yeah. Big down day in the hogs, and it kind of feels like this market is finally topping from a seasonal perspective. Is this topping action, you think?
It feels like it, yes. We were due for some short-term highs last week. We broke out, had a nice run up, maybe a buck or two short of where I thought it may go to, but you're starting to see those cutouts back off, cash is backing off. Seasonally, that would be right on schedule for that to happen, and so I think you're getting those longs to liquidate, and you wonder, the past $4 or $5 that we went up, if a lot of that wasn't the shorts finally giving up and getting out of the market.
Yeah, no doubt. All right. Thanks for joining us, Vince Boddicker with Farmers Trading Company, and that's Markets Now.